Hello again, everyone. Welcome to the Options Mentor. And here we sit at all-time highs again. We had a lot of Fed speakers this past week. Now, this coming week, we will have a blackout on Fed speakers as they do the week before a rate decision, which will be the week after next. Certainly, that'll be big news. And this week, the biggest news probably is the CPI on Wednesday, which is an inflation number that the market likes to look at because the Fed looks at it to determine inflation and their appetite for cutting rates. But before I get into that and a trade for this week, I wanted to let you guys know that finally, I think I've been talking about it here for 2 or 3 months. I have my back ratio and directional butterfly course is now available for purchase on the arimer.com site. By the way, the link's in the description. So let me just talk to you a little bit about this course. Uh, it's like all my other courses in that it starts out with a presentation of basics of the whatever strategy I'm teaching you. And then that'll be about the first half. And in the second half, I go out on the Schwab Thinkorswim platform and show you how I set everything up and trade it on a live platform. So you get a little bit of both there. But the course, of course, will go over the back ratio, the flies, when you might use them, why you might use them. Of course, both of these trades involve opinion. One, a directional fly, of course, you have to have an opinion or at least a fear or thought that something might happen in the direction of the market. So you can set up a directional fly for that and protect yourself in one direction, be fine otherwise, that type of thing. And then the back ratio, that's for whenever you don't know where we're headed, but you think we're going to have a big move. By that, I mean 70, 80 points or more in the SPX. Then that is something that you want to do then. And I will show you in this course how to do it in SPX, SPY, and ES, the complete setup, how I select strikes, what it should look like on the screen. I have screenshots, of course, of the graph, plus take you out and show you a live graph. So it'll all be there in the course. I think you'll really enjoy it if you're interested in these two spreads at all. They're very useful. Back in 2020, after the COVID meltdown in the market, March of 2020, I had the best month I've ever had as a trader, and it was really in large part because of the back ratio. I was able to use it tons of times. You can make a lot of money with it if it's applied in the right uh, situation, if it's right for you, and if you know how to manage it. That's very key, though. You got to get the right strikes, the right setup, the right timing. All that's very important. But this trade can really help you if the market, really gets tumultuous. And I think at the time we're at in the market now, with it so high for so long, you can't really be surprised if maybe, I don't think it'll probably happen this month. I think this is more something after the first of the year. Probably just Santa Claus rally at this month wouldn't shock me. I'd say that's at least the least path of the easiest path, least path of resistance. There you go. Couldn't think of those words. But so it'll be easy for the market to go up more than down through the end of the year. But after the first of the year, you can have a complete change. You can go, wait a minute. Well, what about last month? Oh, that disappeared, and now we're going down if we've been going up, or going up if we've been going down. Or sometimes it's a continuation, no doubt, but a lot of times you can get a change in the first part of the year, and this market's due just for normal market health for a pretty good pullback, probably 200-300 points or more, even more than that to be realistic. But I think we're looking at that here soon, and maybe a directional fly and or a back ratio could really be a useful strategy. I'm sure it most likely will be if we get a scenario like that. I know I'll be using it, and the folks I work with over at arimer.com every day, I'll be talking to them about it and helping them use it also. So this is a way for you to learn that trade. And by the way, as soon as the course came out the other day, it's already on sale. Normally this course will be $249. Right now it's $199. All of my courses are $199. They're all on sale through the end of the year. And if you go to the link there in the description for it, you'll see I have a bundle price where you can buy all my courses at a really steep discount if you want to buy them all at once, or even if you're just buying one or two. That $199 price is pretty good because they go from $250 to $275, my courses, so it's a pretty good one. And I think you're going to like it. It's over an hour long, about an hour and 15 minutes long. Some of my courses are even longer than that. But I do go through pretty thoroughly uh, all these strategies in these courses. And not only that, if you purchase this course, you get access to talk to me during the market day and whenever on Slack. We have a Slack account, and there'll be a channel just for you if you bought one of my courses or any of my other products. And then you can talk to me during the day, just chat, text or whatever if you have questions. So it really is a pretty good value for what you're getting. You're getting access to an experienced trader, and of course, you're getting access on the information, the ins and outs of that particular strategy. So let me go back over here to my Think or Swim Schwab trade page. I want to show you one last thing, and I'm going to talk to you about a trade for the week. And that is, see, the back ratio. I've shown it on here before, but in case you've forgotten it, it is a trade where it can go in either direction and you're going to make money, right? As long as it goes up firmly. It's got to go up firmly or down firmly, or that's going to be a problem. You'll just have to exit it. Most likely at a small loss if you don't stay in it too long. But I go through all those things. There's a lot of caveats, cautionary tales, and cautionary concepts that you need to have whenever you do either of these trades, and in particular, really the back ratio. So that's that. I hope you guys will go to the link in the description and check out that and all my products at airmer.com. As always, if you have any questions too, you can email me, and that is also in the description. My email address at theoptionsmentorspx at gmail.com. All right, so for the week at hand, as we've been saying, look at this market, all-time highs. What it's based on, who knows? But here it is, and we're in a bullish month on top of it. So we have a Fed rate decision coming up. I think you could get a little chop, but I don't think the Fed's going to disappoint. Most of the market expects them to cut rates by a quarter point next week. What is Wednesday of next week? But I think it's the 18th. But it will be coming out then at 2 Eastern that day, what they've decided to do, as well as a statement. And 30 minutes after that, we will have a press conference with the Fed chair. And a lot of times the market watches that and wants to ask questions for clarification there also. And also, once again, looking forward to what they do the next time. So a lot coming up there next week. Now, this coming week, we got that CPI, but I think this is a very tradable time in the market. I think you have to be aware chances are we'll drift up. But if you look over here, the VIX itself is very low. We're down in the 12s now. If we go to a VIX chart, let's take a look at one of those. If we go over to a VIX chart, you can see just how low this is. When has it been lower? A little bit back here in the summer. Other than that, all year long, it's been above where we're at right now. Now, the VIX is a mean reverting index. By that, I mean, if it gets out of whack, it normally comes back in. So what happens very often is if you get a really high spike in volatility, if you can just look here, it comes right back down, sometimes faster than others. But whenever you're low, it can trend along like that for a while. But you do, as you can see here on the chart even, it gets these spikes that come out of nowhere. So we really, it doesn't hurt to be long Vega here, just in case that happens. But if it doesn't happen, what I like to do in this trade, whether it's if that particular spikes happens or not, the trade I like to use the most in this market environment is the calendar, because it is long Vegas. So if we do get a vol spike, it can at least be helped by it at times. And it's very, very lucrative or very high theta ratio, meaning you get a lot of money on time decay compared with some of the other trades. So if I just model one here, which is probably what I would do, somewhere right around the money. If you want to say, hey, Mark, I think we're going to drift up. Can I get a little more room? Yeah, you could do something that's placed above the market. You can see here, if I just use Friday's close of 60.90, if I use the 6,100 calls, selling the 13th, buying the 17th, I'll talk to you about those dates in a moment. But you can see I get a little bit of up room. So even if it does go up, in any of these trades, flies, calendars, diagonals, the best place for you to be is in the center, ultimately. Now, you can make money on both sides. You can see that here. But the center is your most peaceful place, your most lucrative place ultimately. So it will drift up towards that. That's good for you, your long deltas. Or you could just do it at the money also and just play it out. Say, I don't really have an opinion. I think we might chop down, go up, and I'll just be right in the middle and play even. That's fine. So you could do this either way. Now, let me talk to you a little bit about duration. First off, I like to do my calendars 4 days wide, meaning I sell a Friday and buy the long 4 days later. If we're under 15 on the VIX, we're under 15 on the VIX. So there it is, 4 days wide. But normally, if I put a trade on a Monday or even a Tuesday, I would be putting it on for a week from that Friday. You guys have heard me say that who knows how many times on this channel. But what I've been noticing is with all this tension around the Fed coming here, and here it is, December, there's a lot of tension in the market. They just don't seem to give the theta up the way they should. Of course, the theta is happening every day, whether you see it or not. Time decay is part of life for an option. It's going to be worth less just on pure time value because the closer you get to expiration, the less time it can really help somebody, the amount of time left. But what happens is this volatility or vega can rise or in the front or the first week, the 13th in this example, and maybe stay with or even go higher than the long. Now, this will all work out on Friday or sometimes like this week on Wednesday, we have that CPI. I wouldn't be surprised if you see Friday IV start to come down once that CPI is worked out Wednesday, maybe by Wednesday afternoon. But that's what's been happening a lot. You just have to stay in a trade and you just don't get much until after that news event. So this week it's on Wednesday, and I just don't see the point in going all the way out to a week from Friday whenever I could just put on this Friday. It'll be plenty tense till then. Things come out on Wednesday with the CPI, and then hopefully your theta will come in. Now, another reason why I don't want to use the short of the week, what would it be, the 20th? I don't want to use the 20th as a short next Friday, a week from Friday, because that is going to be the week that the Fed meeting comes out. Now, you can imagine between now and when the Fed makes their decision a week from Wednesday, you won't see those 20th options come down much in IV, will you? IV does show demand and tension at a certain strike, certain time period. And certainly people are going to be tensed up and interested in buying options for the 20th until the Fed makes that announcement. So for this week, I think our best bet is to use this Friday because this Friday won't be participating in the Fed announcement tension. It will actually, I think, come off. I think you'll see the theta pour in pretty decent after the CPI. Now, eyes wide open, folks. You could always have huge moves from these too. Now, if that happens, you'd have to know how to repair the trade. But I think we have a decent chance here of maybe even not even have to do a repair uh, as long as the CPI isn't, really a surprise for the market, which is unlikely it would be a huge surprise, but you have to be aware that could happen. So I do like calendars this week, doing them for Friday and selling Friday, buying Monday, try to get 8 or 10% profit and get out. That's the plan. And you can, if you need to, adjust or repair it up until I've been finding about Wednesday morning or so of the week of expiration, which this would be. So if you want to come over to arimer.com, links in the description, you can find out how to do that and be with me every day over there. You can also get by emailing me some one-on-one mentoring. You want to know more about that, let me know. That's also at a discounted price. If you buy it this month, you can use it next year, January, February, whatever. But to get the discount on my one-on-one mentoring, you do need to purchase that this month. So if you want to email me, I'll talk to you about that also. All right, so that's what I have for this week, folks. I like calendars. I got that back ratio course out for you. All of my courses are on sale. I do hope you're having a great holiday period and a great time trading. The last few months, I think, have been a lot better. This has been overall, if you're a spread trader like this, I think it's been one of the more tough years. Still some opportunities, but it has been a struggle at times with how this market has behaved. But I really do think now we got the election out of the way, we got this rate cuts, the rate cuts are coming out of the way. I think next year probably shouldn't be, unless something new comes along, shouldn't be as tough to trade as this year was at times. But I will be back next week and we'll see what's going on. I'll come up with something for the Fed week what we want to do there. We'll see what happens this week and see where volatility is. Where's the VIX? That will really determine what I do and what I talk to you about next Sunday. But I'll be back here next Sunday. And always, I appreciate you guys being here. Please hit the like and subscribe. Please check out the links in my description and what I do every day at airmer.com. And I want you to have yourself a great week and a great holiday season. Have a good one. Bye-bye.